Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the 16th of June Bull versus Bear webinar. Steve Miley here on the call with Trade Day. Welcome, everyone, to another Monday. Going to go for our slightly different run through on Monday. We'll take a slightly bigger outlook for last week. Well, not the outlook for last week, the recap for last week and the outlook going into this week, checking out all the fundamental macroeconomic, geopolitical, data-driven, technical events that are driving financial markets that you guys are trading right here, right now. We'll also take a look at the calendars and the charts. So we've got both the macro matters and the macro summary in here. Remember, if you're watching in the members area, we have 3 columns below where you're watching this. We go to the members area. We have on the left-hand column the technical analysis reports that come in daily from Market Chartist. That's me. Then we have the middle reports, which are the fundamental macro matters. So we've got the bit more in-depth, usually like 4 or 5 page macro matters in here, going through the recapping what's happened in the week and looking forward to the week after. And then we have the macro summary you see here, which is basically a bullet-pointed, précis summary of exactly that macro matters report. So we're going to go through that first of all. So US and global stocks reversed early week gains. So stocks were up at the beginning of the week, stock averages in the US and globally, but then slipped at the end of the week due to geopolitical tensions, which we'll come to shortly. So initially higher as US CPI cooled lower, coming in lower than expected. CPI data rose just 0.1 month over month, below 0.3% forecast and 2.4% year over year. So all moving in the right direction. So that's a definite positive. And another kind of small positive in here, although the market wasn't particularly bullish in its reaction, was the US and China come to a preliminary trade agreement on a framework to move forward after 2 days of negotiations in London. So that was a positive. Well, that took us through midweek. So markets were on a positive standing. But then obviously at the end of the week in here, we had a sharp increase in geopolitical instability with Israel doing preemptive strikes on Iran and retaliatory attacks from Iran yesterday, sending oil up significantly, Brent crude up 7%, West Texas Intermediate WTI up 12% on the week, and sending stock indices lower in here as we moved into a risk-off event. So that is continued and escalated through the weekend. However, markets have been very resilient, even though lower on Friday. Did manage to bounce. We did say this could happen on Friday. They'd already started to bounce on Friday, continued that bounce on Friday, and then we also had markets opening up slightly lower and then rebounding already in here this morning. European, Asian stock indices, will come to them shortly, and US stock futures all nudging back higher in here this morning. So even though we've had sort of some continuation, it hasn't been an escalation. We haven't seen significant disruption on the oil markets. Oil has pulled back. Gold also spiked higher. Gold has pulled back as a safe haven. So markets moving back into more away from the risk-off scenario, which was gold up and oil up on concerns, and then stocks lower, and then moving more into back away from risk off, not it's aggressively risk on, but kind of staying very much on the stock indices within ranges we've seen. Looking forward into this week, the main event is where we have the Fed. Now, the Fed decisions are pretty much a non-starter in that we're not expecting any change. So that comes on Wednesday, but we do have a host of central banks in play in here this week. So we get the Fed on Wednesday, Bank of Japan is before that, actually on Tuesday, Bank of England Thursday, and then the PBOC, People's Bank of China, on Friday. So a busy week for central banks in here, really to focus mostly on the Fed, and we're expecting no change from the Fed, but I'm going to be carefully watching. We do get the economic projections as well, that dot plot chart, so we'll talk about that a bit later in the week. So that's going to be important, the dot plot chart. Where did the Fed see rates going into the end of this year? We'll also be looking at the statement, and then also the press conference. There's a lot of moving parts. Obviously, inflation's moving the right way, but the jobs market has stayed relatively resilient as well. And then we've obviously got the backdrop of then the tariff issues, and we've also now got these geopolitical tensions. So it's going to be interesting to see how the Fed take all of that into consideration. So the statement and press conference is going to be important, and also those economic projections, the dot plot chart. So we'll be watching those. those. On the data side, it's relatively light in here. Now, if anything of real note in here, where are we? I think we have retail sales. Do we not? Or is it UK? Yeah, UK retail sales towards the end of the week. There's nothing really massively stand out on the US side going into this week. Actually, very quiet week in here on the US side. So really, the Fed is going to be the main thing to focus. But we have plenty to focus on the geopolitical side going into this week. So looking at the morning briefing in here, morning briefing Americas, Israel and Iran is to escalate with no signs of easing. So escalation, however, not necessarily negatively impacting. The UN's nuclear watch said Israeli strikes caused serious damage to Iran's uranium conversion site in here. But at the moment, we have had nothing really significant that's seen a major escalation. So even though we're getting continuation, it's not a major escalation in here. And so markets are kind of very positive, I would say, in the reaction we've had. Oil's parodied its recent gains in here, and stock futures pointing higher. And we see in here futures rise as conflict spillover fears subside. So there's not been a spillover to elsewhere. The US haven't been dragged in. We haven't seen Iran attack any kind of US bases or anything like that. So at the moment, things are fairly contained. At the moment, shares up. Oil dips with Middle East and central banks in focus. We've already spoken all about that. US stock futures steady with focus on tensions. Fed meeting. Crude market stabilizes. Iran alarm clock doesn't impair oil flows. That's important as well. The oil flows not being impaired, and gold also falling as investor focus turned to G7 meeting. Also, G7 actually kicks off in Canada today as well. If I go back to where are we in here? Yeah, is this it? No. The morning briefing in America. So talking about that as well in here. Where are we? Somewhere in here. But it's G7 kicks off today. So Trump up in Canada for the G7 meeting. So if we can run around the major indices, you can see everything rebounding here. In Asia, we're up 1.25% on the Nikkei and 0.7 on the Hang Seng. European bourses also higher, between 0.5% and 0.75% up on the European markets. UK FTSE, German DAX and French CAC between 0.5% and 0.75% up so far this morning. And US futures also up, with the S&P and NASDAQ up between 4 and 0.5 so far today. A quick look at the FedWatch tool, and keep this in mind as we go into the meeting in here. Effectively, what we have in here, 0% chance in here of a rate cut at June, and very little chance in July. 81% chance we're still unchanged in July. First cut expected really in September now. So we have in here 55, 65, 66% chance of a rate cut. 55, 60, 66% chance of a rate cut by September. About 34% chance we remain unchanged. If we go to October, even more chance then by October. And then by year end, we're looking pretty much fairly certain in here. So only a 27, 33, 34% chance we've only had one rate cut by year end, and 66% chance that we've had two rate cuts by year end. So that's what the market is currently pricing in. On the bond markets in here, the market's very stable in here. So we've been kind of just chopping up on 10-year yields between 4.3 and 4.5% really for now, 2-3 weeks, maybe up to 4 weeks in here there. So the market not really doing too much on bonds. And if we look across the board in here, the 30s, 10s, 5s and 2s, we still see, although it's been kind of sideways, 30 years have actually been grinding slowly up, even though we were down at the end of last week. Markets pushing steadily up in here over the last May through June. So we're in this kind of mini uptrend, reversing these downtrend lines. And it's a similar story for 10 years and 5 years and 2 years. So market kind of in this basing pattern in here, although it's more of a range, risk more to the upside. So it's higher prices. And if I flip back in here, the risk is for higher prices. This is more like a topping pattern. So we're looking for lower yields, higher prices, lower yields. There's on 10s, similar story on 5s, just coming down from that trend line on 5s, as you see, and 2 years in here just fading but back from the recent peak and below that trend line. But still this sideways action in the short end of the curve, the 2s and the 5s in here, still looking more like a basing pattern with risk for higher prices, lower yields, which should be supportive of stocks. Stock indices, I've still got the reports in here on the June contract at the moment, but we expired and rolled into the September contract. So the liquidity kind of split at the moment between June and September. You can probably trade both or whichever one you prefer. As you move through the week, you should certainly start be moving to the September contract. in here, so June or September contract. But at the moment, you can see the market's kind of sideways in these kind of flag formations, but remaining resilient. And if we actually go on, I'm trading a bit. I noticed today it offered me the rollover, and it's rolled the Nasdaq to the September contract already, but not the ES. It's kept the ES on June. But nevertheless, I think the important thing is we look at either. So I spoke about this 13-period EMA last week in here, and the market, you can see, went down and pierced it like it has done previously over the last month or so. Pierced this 13-period EMA, but and closed bang on it on the ES on the June contract. And this morning we opened up below it, and now we're back higher on the day. So we did push below it, and now back higher and back above it on the day. That 13-period EMA today coming in at 59.82 on the June contract. Remember, on the Nasdaq, it's rolled to the set. But again, you can see on the September contract breaching that 13-period EMA on Friday, closing bang on it, below it this morning, back above it. And on the September contract there, we're at 21.873. So it's also rolled 893 in here this morning. So around 21,900. So that's going to be an important line in the sand in here. But if we go and look on the 30-minute charts, and you can see the market in here is very much in this kind of choppy sideways phase towards the upper end of the range. And, you know, for me, all the risk remains to the upside, whether it's on the June or the September contract in here. Risk remains to the upside in here. The market's looking fairly resilient in this chop sideways range. Given what's been thrown at it, given that we've got effectively war breaking out in the Middle East, the market's remaining in this kind of sideways consolidation, rebounding off support and aiming back up to the recent highs. So markets, you know, equity markets, whether you look at you're playing the June or the September contract, have remained pretty much resilient in here. So do remember to start monitoring that liquidity, whether liquidity rolls over at some point. The Trader Ninja Trader won't allow you to open up new contracts on the September contract, so you'll have to, on the June contract, you'll have to start trading the September contract. You won't be allowed to open up a new position. So, but for now, you know, the liquidity is kind of split. You can trade either, but, you know, I'd think about start to roll over to the September contracts, and we'll be focusing on those certainly going forward in here. All right, guys, I'm going to wrap it up there. If we go just back quickly, I didn't touch you, but nothing really on the calendar in here. We've got Bank of Japan later tonight. Nothing on the calendar. We do, as I say, have the G7 meeting, so maybe something coming out of that, but unlikely. So watching out for anything that might come out of there, though. It's a very quiet day, very quiet week for the US. Overall, as I say, on the data side, and very much focused on the central banks, with particular focus on the Fed statement and press conference on Wednesday. All right, guys, I'm going to wrap it up there. We wish you all a great trading day. Take care, stay safe, and we'll be back with you tomorrow for another Bull versus Bear webinar.